Good afternoon from Los Angeles, and welcome to Stock Market Today, sponsored by Interactive Brokers. On today's show, we're going to be taking a look at the charts of Boeing, Intuitive Surgical, and more. But first, let's take a look at the major indexes. It's Alyssa Corum here with Ed Carson. And Ed, we did finish with losses for the day, but the Nasdaq was able to cut its loss almost in half, closing down about 0.8% for the day. The S&P 500 also coming pretty well off intraday lows. The Dow wasn't able to do that. But what do you make of today's session, given that we've seen, a decent trend higher, but today was probably the biggest spread that we've seen in a little bit?
Yeah, I mean, one of the things is some of the negatives were software and, Johnson & Johnson and Boeing, which we'll get to later, but some of those aren't doing so great anyway. So, at least it's in, some of the breakouts are doing fairly well. And as you say, we've definitely bounced from the October 3 lows when the NASDAQ and Dow undercut the 200-day line intraday. So that was a positive. But on the other hand, you could also argue that it's like we're coming up to some key levels, like where we were in September, the September peak, and then the July all-time highs for all the major indexes. You can almost write a trend line from that July high down to where we got to yesterday. And, again, the rally doesn't want to die, but it hasn't really shown that it really wants to take off either. So, I mean, we gave up most of the weekly gains, but we did probably rise a little bit for the week. That's just the way the market is going. It's just something to remind investors to still be cautious.
Yes, we'll definitely be keeping an eye on those breakouts, and if there are any sell signals, investors should definitely make sure to be watching those. But let's take a look at a few individual names, starting off with Boeing on the downside, as Ed mentioned, dropping almost 7% in heavy volume as a turbulence is coming back into this stock related to its 737 mishap that just keeps plaguing the stock.
Yeah, I mean, now the day's news is that the big thing was that there were some instant messages from 2016 that appeared to suggest that employees were misleading or lying to the FAA about a key safety system with the 737. And there's been actually a lot of negative news that Boeing sort of held up on, but boy, it did not do well today. It plunged through a buy point, plunged through the 50-day, 200-day line. This was really bad news for the Dow because the Dow is price weighted and the Boeing is the biggest weight in the Dow. So that one coming down really hit the Dow index. But this just shows you that you want to be really cautious about buying a stock that's in the middle of scandal, in the middle, regulatory overhead. You just don't know when anything is going to come in. I mean, 'cause there were some promising signs, but we're not there. And it's like, it's hard to say because we did hit a buy point. It's hard to say don't buy it, but at the same, there's definitely a lot more issues than with a normal stock.
That's right, and Boeing did close essentially at the very bottom of its trading range for the day, so selling didn't let up in this stock.
No, not at all.
All right, well, moving on, we want to take a look at how the software sector is holding up because, as we know, it was at one point the top performing sector earlier this year, but not so much anymore. And you noticed a pretty interesting technical indicator on a software ETF chart.
Yeah, the IGV ETF, and this includes Microsoft, which is not doing that badly. So in some ways, the leading software makers are even worse. The relative strength line, that sort of the purpley line down there at the bottom, that actually fell to its lowest level since early January. So this ETF, so this sector that was so powerful for much of the year. Actually, if you had bought back in like the very beginning of January, you would have been almost better off buying the S&P 500. So, that stuff happens. Today we had Atlassian, which had decent results, beating views. They guided up a little bit, but the valuation on a lot of these stocks are very high. And there's just concerns that going forward that the growth just isn't going to be there like it was. I mean, these companies were growing 50, 60, 70%, some of them. And the growth rates are coming down. We're going to have a lot more companies next week, but a lot of them were hard hit, especially those that weren't hard hit earlier in the week. But just a lot of punishing losses. It's been coming down through the 200-day line. Just not really anything good there.
Right, which is why you definitely don't want to be falling in love with the sector.
Yes.
And just because Wall Street at one point was saying, and still is a lot, saying how we are in the early stages of this big ramp up and shift to the cloud. Well, it looks like maybe that's not as strong of a case anymore. And besides that, you have to be looking at these charts, looking at those sell signals, because a lot of those leaders that have rolled over, of course, were flashing those sell signals even before getting to the levels that they're at now.
Yeah, months ago. And usually you sell on technicals. The technicals will almost always show up before the fundamentals, and that's certainly the case here.
Yes, always pay attention to that sector rotation. And last but not least, let's talk about Intuitive Surgical, which gained about 7% today in heavy volume, gapping out of a base here. We do have earnings growth of 21%, accelerating over the prior quarter. Also, sales growth of 23%, also accelerating over the prior quarter as well, and strong double-digit growth, which is nice to see.
Nice to see accelerating growth. You're not seeing that a lot with a slowing economy. We just talked about software, decelerating growth in general, or moderating growth. Yeah, I mean, this came through. A lot of its bases, it had been sort of very wide and loose, and recently it formed more of a cut base. It was a little tighter. It tried to break out, sort of failed, but then cleared that today in really strong volume. And actually, it's part of a larger consolidation. That handle would technically work with that larger consolidation if you wanted to. So there's even that. Just you can see the volume bar down at the bottom there. That's the strongest volume in quite a while. That's nice. The relative strength line, yeah, it had not been so great until today, really popping up. So this one can have some big moves on earnings, but this one is very nice action today. It's really nice to see a breakout on a negative day.
Yeah, and it was able to sustain the gains throughout the day, closing at the top end of the range, which is, of course, really key to look at when you are looking at these breakouts on earnings, because sometimes we do get reversals after a big move higher.
Well, yeah, like Netflix, which went up like 8% in the morning, closed up 2.5%, and then plunged today. Pretty miserable results. So yes, it was very nice to see this action.
Right. So obviously that's not a guarantee that this stock won't lose a little bit from here, but always good to see it close at the top end of the range. And from here, we'd like to see it hold those gains.
Absolutely.
All right, everyone, that's it for this week. Before we go, I want to remind you that we do have a new episode of the Investing with IBD podcast out now. We have a new episode that drops every Thursday. And this week, Arusha was with Andrew Horowitz of the Disciplined Investor podcast. And you got to get his analysis of the potential shorting opportunity with Facebook. So an interesting take from him on that. And also next week, we will have another episode of our investing strategy show at the NASDAQ market site in Times Square. Among my guests will be Invesco, and we're going to be taking a look at the solar ETF TAN. And speaking of sector rotation, solar has been one that has really been on a pretty big run this year.
Had a pretty big run. It did have some selling recently.
A little lately. It's not as strong as it was looking.
But it's definitely been a very strong sector this year.
All right, so we'll get some insights on that. So make sure to keep an eye out for the episode on Monday. All right, everyone, thank you so much for joining us, and we'll see you right back here next week.